Hello, everybody. Hope you're staying warm in chilly South Florida. So we got a little bit of a cold front coming through, but we're going to keep talking about some tax stuff. And oh, we love real estate so much. That's really what we're going to be talking about today is real estate. So, shall we just hop in? Hi, I'm Bette Hochberger, CPA, CGMA, and today we're going to talk about the tax benefits of owning rental property, right? We love real estate. There's so many great things about it. And it's complicated, right? So it's not always the easiest thing, but there's so many benefits. There's so many great tax things that you can take advantage of by having rental property. So, first of all, there's different kinds of rental properties, right? You've got residential, you've got commercial, there's long term, there's short term. But fundamentally, no matter what kind of rental property you have, you've got two aspects, right? You've got the income, right? You've got the rental payments, the rents, and you've got the expenses, which is anything that you're paying in relation to running and maintaining that property, as well as depreciation. And that's probably the best part of having a rental property is the depreciation, because it takes the entire cost of the building, right, and lets you have a little bit of the deduction for it every single year, which is kind of unmarried from the, or divorced, I guess, from the actual cash transaction. So you put very little down in comparison to the entire price, but over time, you get to deduct a piece of the cost of the property as though you laid the cash out, right? So it separates those two things a little bit, which is kind of neat. So that's how, in general, depreciation works. I guess like a little bit of a downside is if you're paying a mortgage on a property, right? The entire mortgage payment is not a deduction, but the interest is. So even though, a little bit stinks with like interest rates being a little higher, it does mean that you're getting more of a tax deduction for it. So, I mean, I guess there's good and bad with everything, right? So, higher interest rate kind of stinks, better for your taxes. Now, one of the really cool things about real estate is what we call a 1031 exchange. So if you have a property and say you're like, oh, I'm sick of this property, I want a different property, or I want to not be in this rental property in this market, I want to move into a different market, or whatever the reason is, trading up, trading down, there is a mechanism called a 1031 exchange. And what's so amazing about this 1031 exchange is it lets you defer, right? It doesn't eliminate it, but it lets you defer the capital gains that you would have on that transaction and just push that down the line. So even though you're technically like selling a property, you're not dealing with any of the capital gains of that property, or mostly not dealing with the capital gains. Depends on your situation, right? As always. But it lets you defer that tax burden down the line. And you can actually use that as an estate planning tool, which for younger people might feel a little bit morbid, but you can 1031 like forever. You could just keep like trading properties, right? And updating your depreciation tables and all this stuff, and do that literally till your death, until you leave it to your heirs. So 1031s are super powerful. Now, here's what I'm going to say. If you have to sell a property and you can't 1031, there's a lot of rules about 1031s. That's a different video. But even if you have to sell a property, and assuming you've held it for more than a year, because usually rental properties, you hold it for more than a year. If you held that rental for more than a year and you sell it, even without the 1031 exchange, even without that deferral, the long-term capital gain rates right now are so much better than the ordinary income rates. You're not really in such a bad position. I mean, I know nobody ever wants to really pay taxes, but long-term capital gain rates are some of the best rates that we pay on taxes. So even if you can't take advantage of that 1031, it's still really not a terrible thing. And then there's also passive activity rules. So in some regards, people get a little bent out of shape about not being able to deduct real estate losses, right? Well, okay. If you're not a real estate professional, you're not able to deduct real estate losses on long-term rentals. Okay, wow. It's sad. But the thing is, even though the passive income rules and the passive loss rules don't let you take that loss against other income, they don't go away. You don't lose it. It just rolls forward. So if you're like, oh, rents in this area went up, I'm going to raise the rent on my rental property. If you've got built up passive losses, even though you've increased the revenue on your property, those passive losses can roll forward and still eat away at any profits that you might have in future years. So you're still not paying taxes on that money. It's like free money, right? It's one of the few tax shelters. I'm going to air quote, it's not really a tax sheltered, but it's sheltered income in that you're receiving a rent and you end up paying nothing on taxes. So it's not terrible. It really isn't. And then, if you're somebody who maybe has a few rental properties, if you've got a home office that you're using exclusively for managing your rentals, you can actually take that as another deduction on the rental property. So business use of your home for running your real estate empire. As always with everything in tax, there's a bunch of rules. You got to make sure it applies to you in your specific situation, but it is available. It's something that you can claim. Also mileage. If you have to drive to the property to check on it or to fix things or go see the tenant or meet the handyman or the repair person, mileage, track your mileage, right? So there's all of these little added bonuses that over time can become kind of a nice tax break. So those are some of the reasons why we really, really like the benefits of owning rental property. Did I forget anything? Are there any others out there? Do you have any questions? Drop a comment, contact our office, schedule a meeting, and we'll see you next time.